All right. It's a great day in South Florida. My name is Chris Igoe. Welcome to Living in South Florida. If you're new to the channel, welcome aboard. And if you are a returning viewer, then I appreciate your participation in my journey. Let's get right into it because the Fed is lying. A severe recession will destroy the housing market. And I'm going to go deep into what the Fed said way back then versus what they're saying right now so that you've got context as to what's really happening right now in today's market. Now, we've got CPI numbers that are coming out this week. And the Fed has gone out there and stated they're going to do whatever it takes in order to curb inflation. And while I suspect that's true, let's talk about some of the unintended consequences of some of the moves that they're making right now as we, the consumer, continue to be impacted by massive inflation, by fear and uncertainty, and how we can best prepare ourselves in order to be able to make the best decisions for ourselves, for our families, and for our financial bottom line. And of course, I'm going to tie this all together and use real data applied properly so that we can anticipate what's going to happen in the future based on leading indicators, not lagging indicators. And unfortunately, the housing market and real estate is a very lagging indicator. It's the last domino to fall in the economic cycle. So it's important to understand what's happening right now across the board so that you understand what the right move is for you and if you should buy now or wait. And more importantly, how you can capitalize in these changing markets. So if learning more about that is your thing, then please keep watching. Boom! Boom, we're live. All right, let's get right into it and let's go to our good friend, Uncle Ben. Now, if you don't remember who Uncle Ben is, I'm going to bring you up to speed because Ben Bernanke was the Fed chairperson who went out there in 2005 and did his best to ease the concern of the consumer. And history shows that he was completely full of ish. And if there's any expectation that the government is going to tell us the truth, well, then I'm here to disabuse you of that notion because they're never going to tell you the truth. They're going to say what they need to say in order not to panic the markets. So let's get right into it and see what Uncle Ben had to say way back when.
We want to talk about a housing bubble, particularly, from the Fed, from all sorts of different places. Can you give us your view as to whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong. We've got a growing economy, jobs, incomes. We've got very low mortgage rates. We've got demographics supporting housing growth. We've got restricted supply in some places. So it's certainly understandable that the prices would go up some. I don't know whether prices are exactly where they should be, but I think it's fair to say that much of what's happened is supported by the strength of the economy.
I don't know how that looks to you, but to me, reading his body language, it looks like he knows he's lying. But what I see today versus back in 2005 is that back in 2005, we had a housing and real estate crisis that precipitated and caused the financial crisis and the financial meltdown. Today, we've got the opposite. The housing market is not the piece that's going to destroy the rest of the market. It's the economy and the recession, but more importantly, the severe recession that is likely to create a housing market disaster, which I believe is inescapable.
Stay focused. Talk about things that matter to people. It's the economy, stupid.
To be clear, I don't believe that every market is going to react the same way. I don't think we're going to see the exact same dynamics that happened previously, but I do believe that there are markets that have appreciated at such a fast rate that it's unsustainable when the pain of the recession that is sure to be coming, in my opinion, is going to create distressed sales, and it's going to create a lot of pain for the consumer and the psychology of the market. So I don't believe this impacts every market the same way. I do believe the housing market's about to take a big hit. So let's go a little bit further into what they were saying back then, because I think it's important to look at and analyze what's happening right now and what the Fed is saying and how it's obvious that there's a pattern of them lying to us over and over again. But let's bring it back to Uncle Ben and see what the worst case scenario is, or was.
Tell me, what is is the worst case scenario? So we have so many economists coming on our air and saying, oh,
This is painful to watch.
It's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices at a nationwide basis. So what I think is more likely is that the house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though.
So would you agree with Alan Greenspan's comments recently that we've got some areas of the country that are seeing froth? Not necessarily a national situation, but certainly froth in some areas.
You can see some types of speculation, investors turning over condos quickly. So those sorts of things you see in some local areas. I'm hopeful and I'm confident, in fact, that the bank regulators will pay close attention to the kinds of loans that are being made, making sure that underwriting is done right. But I do think that this is mostly a localized problem and not something that's going to affect the national economy.
What's very interesting, and now obviously having hindsight, is when Uncle Ben now talks, he shares publicly that he had to say these things in order to not create panic throughout the country. But I also think it's critical to keep in mind that the lending and the practices that were in place then, which drove the housing bubble to pop, are not in place now. So back then, with no income, no job, and no asset, you could go out there and get a loan. Back then, you could get a loan with 0% down and you could get 110% of loan to value. These lenders or banks, they'd even throw in a free TV, because if you got a brand new house, who doesn't need a free TV? But that's not the way it is today. Separate to that, you had a whole industry built on adjustable rate mortgages. Now, if for some reason the payment terms were not palatable to you, you could go out there and get an adjustable rate mortgage, which would keep your payment low for a locked period of time. And then from there, it would reset at whatever the current interest rates were. Everyone believed that real estate only went up because, as he mentioned, there's never been a time in history where real estate values fell out of bed the way they actually ended up doing. So essentially, everything was built on a house of cards, and that house of cards collapsed. So the lending industry today is very different than it was back then, but it's starting to change. Bank of America just rolled out a program for subprime loans. And if we haven't learned anything from the past, subprime loans to consumers who don't have the savings is a house of cards that is bound to collapse. And then separate to that, Wall Street created all types of securitized products in order for them to profit any way they could on the increasing real estate market. And nobody priced in the fact that real estate values and the housing market can tank. But that doesn't mean it's going to happen. And the housing market is not going to be the thing that drives this, but what is going to drive it is the economic conditions. So I want to talk about that now. I want to bring in Jerome Powell, and I'm going to leave out Joe Biden, because at this point, I don't think anybody believes a word that he's saying. But we must be aware and we must look back at history to understand that they're never going to tell us the truth. And we must be prepared for any scenario so that we can capitalize and make the best decisions for ourselves, for our family, and for our financial bottom line. So we're going to look at employment numbers. We're going to look at mass layoffs in certain sectors. We're going to look at some of the bigger corporations that are already making moves to protect themselves from themselves in the future. Let's keep on trucking.
What is your level of confidence that you can navigate a soft landing for the economy? It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months, thinking there of the war and commodities prices and further problems with supply chains. And the question of whether we're able to accomplish that is going to depend to some extent on factors that we don't control.
Well, Mr. Chairman,
but this is the point I think many of us are making. The factors that are out of your control are not going to be susceptible to those costs being brought down. Oil, gas, I heard you earlier, food, by the measures you're taking. And the risk is that the measures you're taking will slow down other parts of the economy without getting us the benefit of lower prices. So I think that is a big theme today, and I just look forward to continuing our conversation about how you're going to thread that needle. I say that the other risk, though, is that we would not manage to restore price stability, and that we would allow this high inflation to get entrenched in our economy. And we know from history that will hurt the people we'd like to help, the people in the lower income spectrum, who suffer now from high inflation. That will hurt them more than anyone. So we can't fail on that task. We have to get back to 2% inflation so that we can have the kind of labor market that we really want.
Let me be very clear. The government does not create revenue. The government collects revenue in the form of taxes from the consumer. And the government went out there during the pandemic and printed trillions of dollars in fear of deflation. And they must be afraid of deflation because deflation is terrible for the government, but it's great for the consumer. Because I'm making up numbers here, but if you make 100 grand, your 100 grand goes a heck of a lot further because you're able to buy things that are considerably less expensive. And the opposite is true now. Inflation's through the roof and everything is more expensive, which is great for the government because in a deflationary environment, their debt becomes much more expensive. And the government has never had more debt in the history of the United States. But for now, the Fed is saying the things they need to say in front of this next CPI number that comes out next week. And I can promise you, if inflation continues to trend in the wrong direction, we're going to see swift moves from the Fed. And although they've talked about transitory inflation in the past and soft landing in the past, their own economist is warning of the severe recession that rate hikes could create. So although Powell's remarks reflect an attitude common amongst financial elites that the Fed can execute a soft landing in which enough pain can be inflicted on the economy to reduce inflation, but not so much that the economy slides into a recession, their own study undercuts the exact case that Powell is trying to make. And the Fed warns that aggressive interest rate hikes is the same strategy that created a depression a century ago, because the Fed did not account for how quickly unemployment can spike in response to rate hikes. And unemployment is the thing we need to be most concerned about, because unlike the past crisis and financial meltdown, this crisis is going to be completely different. Because if the people who bought homes are no longer employed, then they can't pay their mortgage. And if they can't pay their mortgage, then they must sell their home. And while I don't know exactly who that's going to impact the most, I do know that if unemployment runs rampant, then many housing markets will be destroyed. I've seen your comments and I've read them, and there are a lot of people out there that are talking about the jobless numbers are incredible. We're gaining jobs. This jobless situation is nonsense. Well, that's not true. I think I've demonstrated that politicians and Fed chairmen will lie because they have to. It's their job. But nonetheless, if you look at non-farm payrolls, it appears that the economy gained 315,000 new workers in August, and the unemployment rate rose to 3.7%. Well, something to be mindful of, non-farm payrolls and these unemployment numbers are taken from an establishment survey. And that survey is mostly large corporations. And those numbers look pretty good. Over the last few months, it's been somewhere between 300 and 500,000 jobs added on a monthly basis. But the sister survey, which is not as well known and is not spoken about very much, is the household survey. And that surveys households rather than businesses. And the main differentiating factor and why it's so critical to understand the difference is that the household survey only counts multiple job holders once versus the establishment or payroll survey where multiple job holders are counted for each job, which means that one person doing multiple jobs can be counted multiple times, which means you get a very inflated number. And if you go back and look at the household survey over the last few months, you'll see that we didn't gain jobs across the board. In several months, we actually lost jobs across the board. So let me sum it up for you. The employment numbers are being shown to us through rose-colored glasses. They're not real. And the Fed is lying to us. Now, I don't say that to scare you. I share it with you to empower you to be able to go out there and make the best decisions for yourself, for your family and for your financial bottom line. Recently, I had an agent in my market who represented a listing, or more specifically a seller, and she had the listing in the home under contract. Whoever that buyer was saw my video on Half Price Homes and proceeded to cancel the contract. The last thing I want to do is scare people into or out of making a decision, and I suspect the person who watched my video did not watch the whole video. I know the listing agent, I know the home, I know the inventory, and the fact is that buyer negotiated a phenomenal deal for themselves. And when the listing agent, who I'm friends with, proceeded to tell me the story, I asked her to have that person give me a call so I could talk them off the ledge and give them some context here. But they had negotiated an incredible deal for themselves based on the weakness that's in the market right now. And if their intent is to max out South Florida and live in that home and enjoy that home for the rest of their life, and this inventory is 55 plus, so I suspect the timeline is in fact the rest of their life, they just got an incredible deal. And even if the market completely crashed, their timeline insulates them from that crash, and over time they will make money. So my intent is not to scare the ever-living bejesus out of people. It's to give them context so they're able to go out there and negotiate the best deals for themselves, or be able to capitalize on market weakness when it appears. And I happen to be the perfect case study for this logic. I recently purchased a home, and truthfully, we haven't closed yet, so I haven't fully purchased the home yet, but I'm under contract on a home that fits all of my needs. Got a great deal. I understand the market. I understand the risks. I know what my savings and timeline are, and I have job security, and I know what my income looks like moving forward. I'm 100% confident in that purchase and the ability to withstand any correction that may or may not happen. So if the market was to go to zero tomorrow, which is impossible, I'm still happy with that purchase because it checks all the boxes for why I wanted to buy it in the first place. And if you want to max out South Florida living, be diligent. Understand the market and go out there and negotiate the best deal for yourself, because you can. And I hope you find this content valuable. And if you do, please subscribe, give it a thumbs up, share it with a friend, and just know that I love you for it. Now, I've done plenty of content in the past sharing what I expect to happen in the market and how I expect corporations to take action now in order to sustain their viability as we move forward. And what do we see? Amazon is responding. They're closing 2 facilities with a total of 300 employees, and they're scrapping plans for 42 new buildings. And why is that? It's because they have a massive oversupply. And now the market is such that the consumer is feeling the pain, and they don't have the people to buy the oversupply that they have. For them to continue to expand and grow in this way would be detrimental to their bottom line. And they're not going to do that. And they've also scaled back hiring in their retail division this year, because that's the division that's been hit the hardest by surging inflation. But as I mentioned, real estate and the housing market is a lagging indicator. But corporations, they move fast. They are going to anticipate what's happening in the future, because by the time you read about it in the Wall Street Journal, it's yesterday's news. They're making these moves now, and they're making them to survive and retain profitability. We've got to look at what these corporations do and govern ourselves accordingly. In a previous video talking about the liquidity crisis, I discussed some possibilities that are already starting to play themselves out. We've got US mortgage lenders starting to go broke. And this is at the beginning of the cycle. Jerome Powell said we're in store for a lot more pain, which means we haven't even started to feel the pain. And if lenders are going broke now, I got news for you. Future is not so bright that you got to wear shades. So the interactive map that I have on my screen here was put together by Redfin Data to demonstrate price reductions in some of America's biggest markets. It's notable that Palm Beach County is not part of this map, but that's okay, because I'm going to share with you exactly what's happening right now in Palm Beach County. So this next series of data is highly critical to you understanding what's happening in the market now, because in spite of all the things that I've just shared, every market's different, and every market will be governed by supply and demand. And many of the buyers here in Palm Beach County tend to be more affluent than other places. How much of a buffer do they have from the economic pain of potential recession? That's yet to be determined. But for today, here's what the numbers are. Buyers are still buying, but they've got way more choices. So much like the buyer who got spooked by watching my half price homes video, I hope they stuck around long enough to see what the condition of that half price home actually was. Because if they did that, I suspect they'd feel a heck of a lot better about the great deal that they negotiated for themselves. And honestly, I hope they went through with it because that listing agent's probably going to kill me. And previous to that, we've done many deals together and I thought we were friends. It might only take one deal down the drain to destroy a relationship, but I hope not. But here's what the facts are. And this data has not been reported by the MLS yet. So just know I've got my finger on the pulse of what's actually going on way before most other realtors do. If you go back to March of this year, which is where I'm pointing right now, you can see the major difference between supply and demand. And if you go over here to August of this year, you can see the incredible increase of inventory versus what's sold. So if you're a buyer, you've got way more options today than you have at any point recently. And if you're thinking about selling, this is very critical information because if you don't price your home the right way, ain't nobody getting paid. And by that, to be clear, I mean you, not me. But now let's look at that from a month's supply of inventory perspective. And if you go back to March, you'll see that we had less than a month inventory. As of the end of August, and I realize we're in September, we were still in a favorable seller's market, but the market is changing fast. So by the time you see this, please understand these dynamics have gotten worse and far more favorable for buyers and far less favorable for sellers. Now, I'm really curious if you want me to share what they don't want you to know on how to capitalize on market weakness in other financial markets. And I understand this is a big departure from what I've talked about in the past, but if you want me to share exactly how I capitalized on sector and market weakness during the financial crisis, I'm willing to do so, but only if you want it. So please leave it in the comments down below if that's something you're interested in learning more about. Now, I notice most of you who are watching this content are not local in my market. If you are looking for a real estate professional that we know, like, and trust that can serve and support you at the highest level and get exactly what you want, irrespective of market conditions, then please opt in for a referral at the link below. We will get you set up with the best of the best right away. And if you're new to the area and unfamiliar with South Florida and want to learn about every city that exists within South Florida, please claim our free city/relocation guide, which will tell you everything that you want to know about every city in South Florida. And separate to that, please don't sleep on the playlist you can find at the top of the channel. I've done plenty of content showcasing exactly what it's like to live in each city and in many of the communities that exist here in South Florida. So chances are I've already done content showcasing the area that you want to learn about. And if for some reason I haven't covered that area, then please leave it in the comments down below and I will get to it right away. And most importantly, please check out my next video, which you can find up here or up here, because I suspect you will love it a lot. And if you're even thinking about moving to or living in South Florida, you got to give me a call, text, email, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time, peace.